Hello and welcome to BBIG. How's it doing? Let's take a look. Okay, BBG had a big push to 12, almost 1250 and a pullback. So it opened up here on the high here, and that high was, okay, that open was at 1104, and then it shot to the high of 1249 and fell back and closed at 1022. But notice something that we have here. We don't have a large wick, which means there is some resistance. There's some support here, support. Also, too, this is a shooting star, but it's not a very strong shooting star. A shooting star has to have, the wick has to be twice or bigger than the body. So it's essentially body, wick is equal 2 times body. That's what the rules are for and shooting stars are usually a sign of reversal. Now here we had, it didn't have a true shooting star, but got very close, and you can see what happened to price following thereafter. It just hobbled along and then tried to make another attempt. Packets high. Now, another point too here is that what kind of trade could you have done on this? Have you discovered it here on 9-7? Well, the one trade you could do is called the dip. You buy the dip, comes down, this is your dip, off the low, comes up and closes here, and then you're in the trade here also. So there are two dip trades right here. First dip trade is the most common, which is wait for the last candle to form, and then you enter here. The other form of the dip trade is you have a dip trade and you see that the low is higher than the low before, and you have two choices now. As a day trader, you'd be looking this at maybe a 5 or 15-minute candle, and then see that, and then when it breaks the high here, it breaks the high. So I'm gonna go off there on the high. It breaks the high right there. That is your entry, and it's not going to be far off much. Now, what are the disadvantages and advantages? Each has its own. Here, the advantage is you're catching it while the action is happening. So you see the candle form during day trading and it moves up, and then you're able to enter it right there. And your stop goes to the swing low. And then you have two choices on the swing low for the exit. You can wait for another dip to form and move your low up, such as here. So had this been the same trade back here, then the stop would move here. And after this happened today, you have two choices again, two choices, unfortunately, but everything has mostly two choices for the stop. And that would be one, as soon as the dip was completed, move it here, or more conservative trader would wait for the high, for this high to be broken there, and the lowest point between these two now becomes a stop. And that's the way to do that. And so that's how you've been able to play this today. After this point, you do have price channel. You are breaking the upper, you're breaking the long-term, midterm, and short-term. But that was broken way back here on 827. On 827, it was set here, and now you would have had slippage. Had you said, okay, I'll take that trade next morning open, you would have opened here, and your option would have cost you quite a bit more than what you had planned it from this point to here, and then drop back down to here, back to the slow. So the boats has left the harbor. This is gone. There is another possibility for trade. That is, if the price forms another dipper, and then go do another dip, going for a dip trade, or price comes down. As you see, the 10 EMA is ever so climbing up, and when the price breaks below and closes below the 10 EMA, then you have a choice to go for a put, or you believe in the trend of the market, and that is 70%. Market is up 70% of the time, and that this had straight momentum from down here all the way up to here. That then you can go ahead and then just go ahead and buy the close after it closes above the 10 EMA. Now, what's the significance here before it close off is this. This is institutional buyers zone. Anytime, once this broke the $5 region right down here, once it broke the $5 region here, the portfolio managers start looking at this in some seriousness. Why? Because some $5 stocks zoom to exactly this. And what do you think? The portfolio managers who bought it here and maybe got filled here. Now, remember, portfolio managers are buying during their trading teams are buying during the day, and they see this action. They could have bought it right there, and then boom, it goes this, and they say, "Hey, we're out." Remember, the majority of the portfolio managers mantra is to make 20%. Their mantra is make money, make money, make money. Why? Because they gotta make those pension checks appear in cash at the end of every 30 days or the end of every month. Okay, with that said, we'll conclude BBI, BBIG, and follow it through to see what happens with tomorrow. And with that, I thank you very much for stopping by and checking it out.